Hi everyone, good morning and welcome to today's morning report with me, Rich Perry, market analyst at Hantech Markets on Tuesday the 3rd of February. The European trading session has got off to a very strong start. A few things really coming in the last day or so whereby the market sentiment has been strongly buoyed by. The oil price continues to sharply gain, and I'll show you that on the chart of WTI. If it ever comes up, oil price continues to sharply gain. It's now looking as though it's going to be breaking out strongly, and it's certainly on the WTI. It looks like it's going to be coming up for a test of that 51.30 area, and that would be a big resistance if it breaks out. So that is a strong move, and that is certainly benefiting the oil majors. You've had decent results out from BP, for example, today. That's benefiting the FTSE 100 over 1% higher today. And also what we've had is the potential that the Greek finance minister or the Greek government are going to be proposing a debt swap with its creditors in an attempt to reprofile its debt. It's going to be going for growth-linked bonds and potentially perpetual bonds as well. So that sort of talks down all prospects of a haircut, which obviously you'd imagine that the Europeans would be trying to avoid. So that is a positive, and the market has taken that again as a decent bit of news. So Wall Street was strongly higher overnight, and what we saw is again the volatility index, the VIX, sharply down. Now that volatility index continues to fly around on almost a daily basis, so it certainly seems to be still fairly elevated, and certainly in the last few days the S&P 500 has been sharply higher or lower on I think on each of the past 4 days. So a lot of volatility in that in those moves. In terms of forex, we've had a rate cut by the Reserve Bank of Australia today by 25 basis points. That was relatively unexpected, although there had been rumours of a rate cut flying around the market, but still there was a 25 basis point rate cut, and the Aussie has been sharply sold off in the wake of that. But if you look on the dollar index, there's still no real movement. It's still sort of fairly consolidating. The euro is still basically just flat, not too much movement there. Continues to trade broadly sideways on the euro. A little bit of weakness on the dollar in terms of versus the yen, with dollar yen being pulled around a bit, but certainly looks like dollar yen could be positioning for further downside, and I'll talk about that in my charts in a bit. But as I said, the main moves coming on all the commodity currencies, with the Aussie, the Kiwi, and also certainly the Aussie and the Kiwi are predominantly lower today. So what about our expectations for economic indicators today? Well, we've got the UK construction PMI coming out in a bit, and expected just to drift slightly backwards to 57.0 on the expectation there on the construction PMI. Construction is around about 7 to 8% of the UK economy, so it has an impact on cable to a certain extent, but not too significantly. The main bit of data today, I suppose you could argue, is US factory orders at 3 o'clock, and this is a fairly volatile number on a month-on-month basis. You can tell here that we've actually been below zero for several months now, and the expectation is for that to deteriorate from 0.7 down to 2.2 down. But I have noticed that the expectations and the forecasts tend to be the expectations don't tend to be hit too often, and it'll be interesting to see if that happens again. But certainly 2.2% down would again not be a great number for the dollar, so it could result in a bit of dollar weakness. But obviously the focus of today is the Aussie dollar, and that is my chart of the day. We had this weakness that we saw here a couple of weeks ago. That came on the back of the Bank of Canada cutting interest rates, and then again last week we had reports that the Aussie, the Reserve Bank of Australia, were about to cut interest rates as well. A well-respected American journalist who is close to the RBA suggested that it was a definite situation that was going to happen, and so it proves that it has turned out that way. So there was a slight bit of an element of selling pressure last week, and maybe maybe that has been factored into this rate cut already, but certainly we're falling at a new low for the multi-year. Actually, if you look, if I drag in here, this is the monthly Aussie dollar, and you can see here we're sort of back below levels of 2010 now, decisively breaking back below that obviously 80 odd level, but also the level of 77 big figure has been breached. That sort of now brings us back towards the next real sort of support area, which I suppose is the reaction highs of 72.65 from January 2009. But certainly it looks like this retracement continues on the Aussie, and could well be seen furthermore in due course. Now, in terms of an intraday basis, what we have is the Aussie just consolidating a little bit. That was obviously the announcement of this rate cut. Just a little bit of consolidation, but what you'd be looking at is probably selling this Aussie into strength now. So you've got this band of support that comes in around that 70s, as I mentioned, that 77 big figure level, and the 77.17 was that low that we saw on the 29th of January. So I think anything between there, 77 around that sort of level, is probably going to be sold into, because it's a bit of a resistance now. Having been old support, it's now turning into new resistance. So I think any sort of rebound is probably a chance to sell on the Aussie. And it certainly looks like there's further downside to be played out in this chart. Anyway, I wish you good luck in your trading on the Aussie dollar today, and I will speak to you later. Thank you.